Ready to start thinking like a CFO? Most business owners run their company by gut feel. They check the bank balance, see if there's any money there, and assume things are fine. Then the BAS comes due and suddenly they're scrambling. That's not how successful business owners operate their business. The difference between a business that stays stuck and one that scales comes down to how the owner thinks about their numbers. Not just looking at them, but thinking about them. Asking the right questions, knowing which levers to pull. That's what a CFO does. And in this video, I'm going to show you exactly how to develop that mindset yourself. We will cover the 5 questions you need to ask before making any major business decision, the reports that actually matter and how to read them, and the weekly rhythm that keeps you in control of your cash. Now, I run an advisory firm. We have grown from 0 to over 25 people in 4 years. We manage around 4,500 clients, and the businesses that scale the fastest all have one thing in common. The owner understands their numbers. So let me show you how to think like a CFO, even if you've never read a financial statement in your life. This could change the entire way you think about numbers. Here is the trap most business owners fall into. They open their bank account and see a number and make decisions based on that number. If there's money in there, they feel good. If there is not, they panic. But the bank balance is lying to you. It doesn't tell you that GST is due next week. It does not tell you that payroll is coming out on Friday. It doesn't tell you that the invoice you're counting on is 60 days overdue and probably not coming. A CFO doesn't look at the bank balance and make decisions. A CFO looks at the full picture: cash flow, profit margins, receivables, payables, runway, capacity. Then they make decisions. The good news is you do not need a finance degree to do this. You just need to ask the right questions and look at the right reports. But before we get into the reports, you need to understand something critical. Everything I'm about to teach you is worthless if your data is wrong. I see this constantly. Business owners come to us wanting to scale, wanting to make better decisions, and wanting to understand their numbers. But their bookkeeping is a mess and their transactions aren't reconciled. Expenses are in the wrong categories. The reports are not good. You can't think like a CFO if the information you're working with is fiction. So step 1, before anything else, is making sure your bookkeeping is clean. That means monthly or even weekly reconciliations, accurate categorization, and up-to-date records. If you do have one, make sure that they're doing their job properly. This is the foundation everything else is built on. Once your data is solid, here is how to actually use it. When I sit down with a client to review their business, I'm not just reading the numbers off a page, I'm asking questions. And these 5 questions will change how you see your business. Question number 1. How long does it take us to get paid? This is the single most important question for cash flow. You can have a profitable business on paper and still run out of money. But how? Because profit is not cash. If you do the work in January but do not get paid until April, you still have to cover wages, rent, and expenses for 3 months. So I look at the accounts receivable days. On average, how many days between issuing an invoice and getting paid? If that number is creeping up, you have a problem. If it's over 30 days, you need to fix your collection process. The fastest way to improve cash flow is not to win more work. It's to get paid faster for the work you've already done. Question number 2, what does it cost us to deliver our service? Most business owners know their revenue, but far fewer know their true cost of delivery. If you run a trades business, what does it actually cost to complete a job? Labor, materials, vehicle costs, equipment. If you run an agency, what does it cost to service a client? Staff time, software, overheads. When you know this number, you can price properly. You can identify which jobs or clients are actually profitable and which ones are quietly bleeding you dry. A CFO always knows the margins. You should too. Question number 3, do we have enough cash runway? Runway means how long you can survive if revenue stopped tomorrow. I calculate this by looking at cash on hand divided by monthly operating expenses, not cost of goods sold. Operating expenses. The stuff that goes out whether you make a sale or not. 3 months of runway is the minimum. 6 months is comfortable. 12 months means you can take risks and invest in growth without panicking. If you have less than 3 months, building that buffer should be your priority before you spend money on anything else. Question number 4. What are our capacity constraints? This is the question most business owners forget to ask. You want to grow, great, but do you have the capacity to deliver? If you spend the money on marketing and leads start flooding in, can you actually service them? Do you have enough staff, enough equipment, enough hours in the day? I have seen businesses scale their marketing with a heap of new clients and they completely fall over because they cannot deliver the work. That damages your reputation and costs you more than the revenue was worth. A CFO thinks about capacity before spending money on growth. What is the bottleneck? What breaks first if we double in size? Question number 5, what is the real cost of this decision? Every business decision has a cost, but most owners only see the obvious one. You want to hire someone. The obvious cost is their salary. The real costs include super, payroll tax, equipment, training time, management overhead, and the risk if it doesn't work out. You want to buy a new vehicle? The obvious cost is the purchase price. The real cost includes the finance repayments, insurance, registration, fuel, maintenance, the opportunity cost of that cash being tied up. A CFO thinks in total cost, not just a sticker price. Before any major decision, ask yourself, what is it really going to cost me over the next 12 months? Now let me show you where to find the answers to these questions. If you are using Xero, there is a report called the management report. It comes out of the box and gives you almost everything you need. It shows you your profit and loss, so you can see revenue, expenses, and your profit at a glance. It shows you your balance sheet, so you can see assets, liabilities, and your net position. It looks at your accounts receivable, including how long invoices have been outstanding and your average time to get paid. It also reports on your accounts payable, so you know what you owe and when. It will also give you an indication of your cash position and short-term cash flow. Finally, it even shows metrics like how many invoices you've issued and your average invoice size. This one report, reviewed monthly, will tell you more about your business than checking your bank balance every day. If you are not on Xero, most accounting software has something similar. Ask your bookkeeper or accountant to set it up for you. For our larger clients, we use a tool called Fathom that gives you even more detail, ratios, trends, forecasting. But for most small businesses, the management report is more than enough. Knowing what to look at is only half of the battle. You need a rhythm to actually do it. Here is what I recommend. Once a month, block out 30 to 60 minutes, no distractions. Pull up your management report and actually review it. Compare this month to last month. Look for revenue trends. Is revenue up or down? Are expenses creeping? Is your receivables balance growing? Is your cash position improving or shrinking? Ask yourself these 5 questions. How long does it take to get paid? What are my margins? Do I have a runway? Where are my capacity constraints? What decisions am I facing and what do they really cost? If something does not make sense, write it down. Ask your accountant. That is what they're there for. The business owners who do this consistently make better decisions. They spot problems early. They scale smarter. And they avoid the nasty surprises that sink businesses. The ones who don't are always reacting, always putting out fires, always wondering where the money went. So here is the real shift I want you to make right now. Stop running your business on gut feel. Start running it on data. That doesn't mean ignore your instincts. It means validate them. You think you should hire someone? Great. Check the numbers first. Can you afford it? Do you have the runway? Is there enough work to justify it? You think you should spend more money on marketing? Great. Check the numbers. What is your current capacity? How long does it take to get paid? Can your cash flow handle the lag between spending and revenue? A CFO doesn't guess, a CFO knows. And now you have the tools to know too. Now, thinking like a CFO starts with understanding your reports. But the most common place business owners get stuck is the difference between profit and cash flow. If you have ever been profitable on paper but broke in reality, that is where you need to go next.